Good morning, students. How are you all? Hope you all are fine at home. Very good, students. Shall we start our lesson? I want to tell you one thing. In the previous class, that differences between the computerized accounting and manual accounting we have seen. This syllabus is not available. Okay. In the reduced syllabus, that heading is not available, so no need to learn. Okay. So today we will learn the accounting software. What are the software available for accounting? Okay, here many softwares available as per the company's requirements, the business organization's requirements. That there are three softwares available. Okay, the first one is ready-made software. Ready-made software. This software is used, it is available ready-made. Okay, so the business organization can purchase these packages and they can install in the computer. So once they have installed, it is easy to operate also, and where the transactions are very simple and routine in nature and recurring again and again, this package will be very useful, and the installation cost also very low. Okay, so small enterprises can use these packages. Then the employees, those who use these packages, this ready-made software, they do not need any training. Okay, then the people who use install the package, they will give proper training for the people how to operate. So special cost of training is not needed in this type of packages. Okay, then some examples are given. The ordinary software, that means the tally, will come under this ready-made software. Then some other packages also given. Okay, busy, mark, then profit books. Okay, that is the first ready-made software. Second one, customized software. Customized software. Here, this software where the business organization, where the ready-made software cannot be used. That means, for example, if the business is little big, the transactions are little large, then they may not be able to install this ready-made software. Those business organizations will use this customized software. Okay, here they will get some more information, okay, than that we get from the ready-made software. For example, the employees' attendance will be got, or the payroll can be prepared. Okay, but here in the tally packages we cannot prepare the payroll. Okay, so here payroll can be prepared. Sometimes we can find out the absence of the employees also. So here, which type of organization will use this customized software? The medium and large scale business units. So medium and large business enterprise will use this customized software. And this installation, cost of installation and training, cost of training to the employees to use these packages will be relatively or comparatively more than that of the ready-made software. Okay. And which organization will use? The large organization. And the transactions, there we learned that it is a routine, isn't it? But here, if the transactions are little peculiar in nature, not a routine. Okay, so if the transactions are peculiar in nature, then those business organization can use this customized software. Okay, then the third software is tailor-made software. Here, very large enterprises only can use this tailor-made software. Here, some organization, they may need some special information for their management purpose. Okay, the management need some special information in order to do their management functions effectively. So, this type of organization can use only this tailor-made software but not the ready-made and the customized software. Here, the installation cost and the training for the use of this software will be very high. Okay. And very large enterprises only can use, and the transactions are also will be very peculiar in nature. Those organizations have to use this type of softwares. Okay, now we will see the general differences between these three software. Okay, that you will understand. Okay, that here no, the cost is very low, here medium, here very high. Okay, then training, here not needed, but here we need to give some training, and here special training is needed. Okay, then the number of users who are using this one. Here very limit only. Okay, limited people only use. Here somewhat somewhat relatively high when compared with the ready-made, and it will be very high. Many organizations use this. Then that whether we can give link to other that information system. Okay, here we cannot. That means that link can be given but very less. Okay, here we cannot give any link to other computers, but here we can give little, not restricted, but it is they can give link to many because the large scale organization only use this one, so that link can be given to any number of computers. Then training cost is very low, comparatively high, very high. Okay, then cost of installation also very low, then medium, very large. The next heading, grouping and coding of accounts. Grouping and coding of accounts. So first we will learn the grouping. What is grouping of accounts? It is nothing but that we have studied only. The accounts, what we have studied in the previous beginning of the chapters. Okay, so the accounts will be grouped under different heading. Okay, so first they will group assets together. Okay, then liabilities. Okay, assets, then liabilities. Then the profit and loss items, revenues and expenses. So totally main four groups: assets, liabilities, revenues and expenses. Then some subgroups also available. For example, if we say assets, we will say fixed asset, current asset, isn't it? Or we can say non-current asset and current asset. Okay, then that expense revenues, capital expenditure, then capital revenue, okay, capital income, revenue income, like that we can divide. From this we can derive the equation. We know assets is equal to liabilities plus capital plus revenue minus expenses. That we have learnt already. Okay, this is the accounting equation. Okay, assets is equal to liabilities plus capital plus revenue plus minus expenses. Now we will say first one, what and all will come under capital. Capital includes capital and reserves and surplus. Okay, capital includes reserves and surplus also. Then under the liabilities, okay, liabilities we will say. Under the heading liabilities, what and all included. Okay, what should be grouped? First one, capital. Then non-current liabilities. Current liabilities and non-current liabilities. What are the non-current liabilities? Here the long-term borrowings from the banks or from the financial institutions. Long-term borrowings and any other borrowings. Okay, but long-term only. Okay, long-term borrowings from banks and other other long-term borrowings. Then current liabilities. What are current liabilities? Here short-term borrowings for 1 year. Okay, short-term borrowings. Then trade payables. Trade payables include bills payable and sundry creditors. Then other current liabilities. Maybe the outstanding expenses all will come under this current liabilities. Okay, other current liabilities. Now the assets, what and all will be grouped under assets. Okay, here fixed assets, current assets we say, isn't it? Here again they divide into fixed tangible assets Then intangible assets. We know the meaning tangible assets. What is the meaning? Tangible means can be seen and touched. The assets that can be seen, we can see with our eyes and we can touch with our finger. Okay, and we can see. They are called tangible assets. What are the tangible assets? Here, land and building. Land and building. Then plant and machinery. Furnitures and pictures. Okay, these are the fixed tangible assets. Then fixed intangible assets. What are the intangible assets? We know goodwill. Cannot be seen, isn't it? Then copyright. Then patent. Then trademark. Okay, all these are the intangible fixed assets. Now, current assets. Fixed assets, current assets. What and all will come under the current assets? Current assets, short-term investments. Then closing stock, that is called inventories. Okay, then trade receivables. Trade receivables. Here in this trade receivables, it include bills receivable and sundry debtors. Okay, then any short-term loan and advance that we have given to others. Okay, short-term loan that the business will give to other people. That is called asset. Okay, short-term loan and advance. Then cash and cash equivalent. Cash equivalent means equal to cash. That means we can say for this equivalent cash at bank. So immediately we can withdraw within the same day, isn't it? So that is also equal to cash. So cash and cash equivalent, any other current asset. Okay, other current asset. We can say the prepaid expenses, then accrued income but not received. Okay, that will come under this heading. Okay, then that assets we have seen. Now revenues. It is divided into two only. Okay, first one, main revenue is sales. Then any other income. That means the commission received, rent received. Okay, they are the other income. Main income is from the sales. Okay, then the expenses. What are the expenses? The main expense is purchases. Okay, material consumed. Then the wages that we pay. Then other manufacturing expenses. Other manufacturing expenses. Then the administrative expenses. That means the office administrative expenses. Okay, office expenses, administration expenses. Then selling and distribution expenses. Then any financial expenses, that means the interest paid. Interest paid. Okay. Then the depreciation, then any provision. Then bad debts written off. Okay, all these will come under this head. Okay, all these are the expenses. Okay, so we have studied the grouping of accounts. Okay, so the total, yeah, all the accounts are grouped under four heads, isn't it? One, assets. Assets is equal to, then liabilities, plus capital, minus, plus revenue, minus expense. Okay, this is the accounting equation. Okay, so you read this grouping of accounts and the packages. You read, okay. Then one more heading only available. Then in the next class I will mark and give. That will be the last class. And again we will meet in the school. Okay, students. Thank you very much.